The point of this full series is, as an investor, I need to be mentally prepared for when these things happen. And again, we're not going to be necessarily giving you stocks that you need to go buy or do anything, because often, even during times of war, the best situation you can place yourself in is have a plan and you don't change your plan. It's really good to know what could happen and will likely happen if these situations occur.
Hey Alex, how you doing?
Doing good, James. How about you?
Doing wonderful. You ready to talk stocks and more?
Yep, we're here with episode 3 today, kind of wrapping up our war playbook.
That's right. The first episode, we talked about if war is steady state, it's continuing as is, not escalating, not declining, still shots fired, things like that, where we are now, but not less. Second one, we said, hey, if we move into peace, what that does or what strategies you may want to contemplate. And then this one is if war escalates.
That's right. And I think it's important to note that, like, when we say the war is escalating, some boundaries around that. So we're talking, the potential for more countries getting involved, assuming oil continues to pick up, the strait gets closed, for an example. Yeah. But we're not talking like nuclear war or like some sort of World War III situation. Yeah. But it's a clear escalation in either policy or aggression by one of the sides or other countries getting involved.
Right. Not our best case, not the one we want to happen, but it could be a potential.
That's right. So again, the point of this full series is, as an investor, I need to be mentally prepared for when these things happen. And again, we're not going to be necessarily giving you stocks that you need to go buy or do anything, because often, even during times of war, the best situation you can place yourself in is have a plan and you don't change your plan. Yeah. So a lot of the time, the best thing is to do nothing except what you were doing before.
Right.
But it's really good to know what could happen and will likely happen if these situations occur.
Right. And similar to before, we're going to tackle it kind of your pick per sector.
That's right. So I think we should start right off with, again, the most obvious sector, and defense is the thing. So obviously, if the war escalates, the precautions that we'll have to take are knowing that there's going to be more military activity that's going on, more missiles fired, more drones, all of those activity is going to be packing up. So a lot of the companies that produce those are going to have to be drawing on their supply or starting to increase the amount that they're producing to make sure that we can keep up with all of that that's going on. I think the other thing is too, when I think about policy, if there's an aggressive war that's happening, it's going to put more pressure on government to reevaluate budgets, and maybe more contracts start getting signed for longer ways to lock in inventory. So a lot of the companies that have general defense won't do as well. A lot of the companies that have very specific military weapons defense, those are the ones that will probably pick up even more from there.
Yeah, which still can cover a lot of companies, everything from software, maybe even AI. I think of Palantir.
That's right.
That has a lot of defense contracts, and of course the equipment, the military hardware. So all of those defense contractors are in play. That being said, what's your pick for this?
So I'm making a little bit of a pivot based off of prior episodes, but this one I'm going to be going with Lockheed Martin. And the reason is basically what I kind of teased there at the start, is they have the most exposure to missile defense and advanced aircraft. Yeah. So all of the things that are going to be doing the strikes, they are really at the center of all of that. And again, I think these kind of situations start reevaluating if, do I need to increase their contract with them? All of these things that are extra inventory loads, more orders come in. All of this is going to happen. Lockheed Martin is going to be benefiting from that. And again, they have amazing dividend growth. They've had really consistent growth over time. I think it's a company that can succeed outside of war, but in an escalating war, Lockheed Martin is going to be one of those companies you're going to see the stock really run, if that's the case.
Lockheed Martin. So I'm assuming they, as you mentioned, cross a lot of aspects. Would they be like one of these that touch a lot of different points within defense?
They do, yes. But again, I think that the focus where they're at is really the weapon piece. And then, as you know, as all these missiles and stuff are getting launched, they're one of the main beneficiaries for there. So the thing to keep in mind is, one of these stocks like this are going to be the ones that run fast, and you don't want to chase these either. Again, because if the war was to de-escalate, this is going to be one of the stocks you're going to see pull back because of that as well.
So maybe if you're in this phase, you're keeping an eye on it, and if it starts escalating, it might be one to jump into for maybe a short-term period.
That's right, exactly. Yeah, but again, they have a really great business outside of war. So if this is one of the companies that you would like to own long term, Lockheed Martin's a fantastic company.
All right, so that's the defense sector. What do you have for us next?
Yeah, so the next one is energy. So again, we already have high energy prices as is, and if the war was to escalate further, if the Strait of Hormuz gets more locked down, it's going to create more disruption with oil, natural gas, all of those resources. You're going to see the oil go up a lot. And so the companies that start producing the oil become even bigger beneficiaries than they are right now. So I think right now, the way that some of these companies are priced, because a lot of the oil producers have been on a really good run just because everything has been locked down.
Yeah.
If things were to escalate more, I don't know if that's necessarily been built into their stock price. So you're going to see a lot of the oil manufacturers pick up.
What's your pick here for energy?
So for this one, I'm going back to ExxonMobil. So again, they are one of the beneficiaries of direct oil. They also have a combination of the natural gas. So they're going to be another one that will have run and will be one of the early ones to run. But this is going to be one that I would want to be in first, just because I believe in their business outside of this. But this is just an additional catalyst on top of everything.
ExxonMobil leading the way.
That's right.
Energy. All right, so that's energy. What's the next sector?
So the next one is industrials and electrical infrastructure again. So escalating war means the security of electricity and infrastructure, back in America becomes even more necessary. That has to be secured. So again, even though the war could be escalating within the Middle East, we still have other wars going on with China in the AI race right now, which is basically a war in itself. That it's a very big focus of the government that we do not fall behind there. So during times of war, there's risk for cybersecurity events and all of these other things that it's going to be bringing to mind of we have to be safe back home as well. And part of being safe is making sure we have the infrastructure in place to make sure we stay on top of technology. So this is going to be another area that I feel will be a positive just because we've got the AI build out going on and then the importance for national security that this is.
A lot of companies come to my mind, but what's your pick?
I'm going back to Old Faithful, Eaton in this one as well.
Okay.
So again, a lot of the companies we talked about in the first episode, some of these, as war gets amplified, it also amplifies the importance of that company. Eaton is another example of this is a fantastic company outside of war. They are critical. We talk about it in our AI bottlenecks videos of Eaton is one of the key contributors to that electrical infrastructure area. So they're going to win outside of war. War makes it so they become even more crucial from there.
And as you've mentioned before, Eaton is critical right now in the AI build out and huge demand, huge growth in revenue. So makes a lot of sense. Do you feel like this aspect, Eaton has any specific or unique role in defense, or is it just kind of like that industry also needs it as well, or do they have like a moat?
So I believe the way that they are not directly tied to defense, but for example, if we just need to start making more manufacturing facilities that produce missiles or produce defensive things, that's when they start getting involved with things. So again, they're critical to just manufacturing infrastructure. So be it missiles or if we're doing data warehouses, Eaton's components are going to be being used in there.
Okay. All right. So that's energy. Next one, technology and AI, which is already being leveraged in a lot of wartime aspects.
That's right.
With that increase, any changes here? Who would you pick?
Yeah, so for technology and AI, war is in general never a positive for tech companies because as valuations get higher, risk comes up. The war creates even more risk. So investors are likely to start selling tech and AI. And I think we've seen that recently, specifically with memory stocks of late. Those have been the ones that were on fire, and then they were the ones that fell quickly from there. So this is where my feeling of tech and AI starts getting neutral to almost, I kind of don't want to start messing with it. The only thing that I would think about is the pullback in tech and AI that would inevitably happen because of an escalating war. There will be companies getting unfairly punished. So there will be certain companies that make sense to go down. Any of those like triple digit / borderline triple digit PE companies, you don't want to be owning those during times of uncertainty because their business is already trading at such a high valuation. But some of the major manufacturers, like an Nvidia, for example, if that one was to pull back for no reason other than just because of the war, that's when the light bulbs can start going on of maybe this is a good company for me to start dabbling a little bit in because it's an opportunity from there. So that's the kind of reframing that I would do. But just know tech and AI, if a war was to really escalate, is going to get negatively impacted.
Yeah, in part what I hear you saying is if it's a strong tech and AI company that's got proven fundamentals, they already have invoices for revenue coming in, they have established revenue, their future PE is lower than their PE, those might take the hit a little less, but then you have these really forward-looking companies with a high PE, maybe not even generating profitability yet, but there's positivity in a less vulnerable market sentiment. But when war comes, it feels like those would be the ones most at risk.
That's right. So that's what we would see play out most likely. And that's why my pick for this one is Broadcom. So they have a well-diversified business with a significant backlog already. They basically have more guaranteed income coming in. And like we talked about, they're one of the strongest dividend growth plays that you can get within tech. So that would be one on my list that I would put as a watch list of if Broadcom gets really hit because of an escalating war, that's one that I might want to start looking to buy opportunistically.
And just real quick to clarify, you're not sponsored by Broadcom, are you?
No, that's right.
We love Broadcom, though.
I mean, I'd be open to it.
Yeah.
So.
I mean, the last few weeks, they've had some, with all the pullbacks and, profit taking and things, they've been in the red.
They have. And honestly, what we've seen happen this year, and this is a little bit of a side note versus things, but a lot of the big winners of early AI, we've seen really not keep up with the rest. Everybody's got their eyes on the flashy object. I have such a long-term mindset that those old faithfuls, if you will, I still think they all have a lot of gas in them, and you can still see from a PE perspective, their valuation looks pretty good. So those are the companies that I want to target because they get even more cheap when people sell because of things like an escalating war.
Yeah, because it's nothing to do with the company. It's just the sentiment and the environment around.
That's right.
And as you say, sometimes they go on sale.
That's right. And again, when we think about an escalating war, my mind should go, what are my watch list companies? What are those companies that I really liked, but maybe they were trading expensive? The war might chip into that, and sometimes unfairly. Those are the companies I want to think about buying at some point.
Yeah. Putting you on the spot a little bit and be outside of the concept that you advocate for in DCA or dollar cost averaging, where you're making recurring investments. When somebody goes on sale or looks like a good buy, what are some of the things you're looking for? Are you looking for, because I've heard things like, if you see something 20% less than its all-time high, that's like a good metric to think, okay, that might be a good time to come in. Or maybe 20% obviously on their 52-week low or something. Do you have something you like to share that kind of gives somebody like, a target to look for?
So I have a mental thing around 10% pullbacks. Like I feel much more if a company's pulled back 10%, I feel much more comfortable that I'm probably getting a decent buy or maybe perhaps an overreaction based off where the company should be. Now, granted, the key thing you have to keep in mind was there a major factor that happened or an event that happened that caused a pullback. If a company had terrible earnings, then the 10% pullback is very justified. But in these situations where we're talking about events that are macro that are not directly related to the company, for example, like we've talked about, and things are pulling back double digits, that's immediately when I'm like, okay, this is most likely a decent time to buy. But knowing that there's so many factors going on, you have to take all of this into context. So again, the overarching advice here would be don't buy it all at one time. Buy a little bit now, see what happens, buy a little bit later. Again, it's the idea of DCAing, right? I'm not putting all my money in at one time. I'm able to buy the highs or buy the lows rather. And if it fluctuates to a high and I buy, it's okay. If it pulls back down and I buy a little bit there, it helps drop it from there. So that's the way I like to think about it.
And the core thing is have a game plan and stick to the game plan as well.
That's right. And again, I think that's the key takeaway that everyone should have. This is more of the mindset you should have and the knowledge you should have as an investor. You really don't have to do anything. And honestly, most of the time, you're going to be better off doing nothing.
Right. And then doing less of, staring and fretting.
That's right. Yeah.
All right. So that's Broadcom for tech and AI. The next sector, consumer stocks. Who do you have for us in consumer stocks?
Yeah. So this one, again, if inflation goes up more, the value seeker comes out more as well. So I go back to Walmart. Again, I'm doubling down on Walmart here. The oil prices being stretched even more is going to make it so I have less money in my wallet. You're going to see significant pullbacks in consumer discretionary spending. People are going to start really reevaluating, like, do I really need to be buying that stuff? Walmart dominates, though, in those consumer staples. So you're going to see more people flocking to Walmart even than there was before.
Yeah, Walmart's flat this week looking at it, but that totally makes sense. And obviously, Walmart in this category is great even outside of war escalation times due to the fact that it's a great addition in a defensive portfolio defensive aspect to round your investments out.
Yeah, so if I have 50% of my money in diversified index funds, and then I have the other 50% to kind of make sleeves or satellites of where I would like to make my bets.
Yeah.
If I make one in AI and I want something defensive, Walmart's one of those stocks that works really well to kind of slot into, like, here's my protective stock that I have that I believe in will outperform other consumer stocks. Walmart has traditionally really done that well.
Yeah. Yeah. And I like having, by the way, this whole concept and framework, because even though we're talking specifically on a war escalation scenario, in the future, you could almost use these frameworks for any kind of global impacting event, whether it's a natural disaster or something else that's happening. And so maybe we're talking about wartime this year, next year, maybe it's a pandemic. Hopefully I'm not wishing that upon anyone.
Yes.
You know what I mean? There's always something going on.
Yeah, I mean, that's exactly it. And if you look back when the pandemic hit and the future was super uncertain, the market cratered. In hindsight, that was one of the best investing opportunities you would have had the last decade.
Yeah.
So it's another example, though. As an investor, you need to prepare for the uncertainty and craziness of the market. If there was no risk in the market, you wouldn't be able to make any money. That's just not how life works. You have to take some risk, but understanding the risk, that's what we're here to help out with.
Right. Well, that's all great advice. Next sector, with a wartime increase, financials. What's your thought here?
So financials is really where my sentiment starts to go negative here. So you're going to start seeing, in general, the market's going to get more volatile as uncertainty increases, which makes more risk on just banking in general. Rates will also be at risk of, further rate increases, which will also just negatively impact stocks and everything from there. My demand to borrow money is going to crater. If I'm seeing an escalating war, I'm not going to take on more risk in myself. And with banks making a lot of money on loans and everything, even though rates are going to go up, you're going to see demand for those really drop. So I would not really want to be touching financials in an escalating war situation because there is so much risk that comes from not knowing what's going to be happening with rates and everything like that.
Yeah, that's fair.
So my pick for this, if you made me pick one, would be going back to JP Morgan Chase. But again, I wouldn't recommend buying in this situation. This would be a watch list candidate because this would be a good area. If there are certain banks or financial stocks that I am interested in, this would draw some of those down in price, and I might be able to get a better entry point during an escalating wartime.
With wartime scenarios, does interest rates typically go up?
They do, because what happens is it makes it so a lot of the commodities prices are escalating up, which is going to drive everyone to start raising their prices because inputs cost more.
Yeah.
And guess who pays for it at the end of the day? The consumer. So then the Fed's like, okay, well, inflation is going up. There's the only way that we can control, or one of the major things that we can do, is raise rates.
Yeah.
So it starts hurting kind of everybody outside of that. But what's interesting is usually when the wars are done, you kind of see like a bounce after that. So it's really hard to time. And I mean, this has been the craziest war where I feel like we're like a Truth Social post away from it going good or going bad. We just do not know. So I wouldn't make any moves off of it, but know that these times of war are generally blips in time from there.
I'm surprised in my ignorance that they wouldn't be more hot because of that interest rate rise. But I guess the inverse is like the interest rates go up, so companies are borrowing. So even though they may make more money, people are just pulling back on their borrowing.
Yeah, and I think going back to the pandemic, looking back at it, those 3%, below 3% rates you were getting on your mortgage are like once in a lifetime. Insane, right? But everyone was so scared, and people were not really wanting to really move or buy because I didn't know what the future was like. It's a supply. It's like it's a scale. The supply and demand. It's always going to be like that, and that's how you can think about it from a bank perspective as well. It doesn't matter if the rates become better. If people are too scared to borrow money, the rates don't matter.
Yeah, that is interesting. Which could have been a hack. That's the time to borrow.
We should have.
That
would have been a great time.
But it's like, it's smart to not overextend. So that's the balance. So, but if you come in with a plan and you're ready for those moments, that's, I think of Berkshire Hathaway having more cash than they've ever had on hand, which raises a question mark to people that watch that kind of stuff to think, what do they know that we don't know?
Yeah.
And, maybe they're being too conservative with how much cash they're holding, but it's a question mark.
It does, but it also, two of my rules that I kind of do with investing, number one is I never follow billionaires because their problems are way different than ours, and I don't trust whatever they're saying. They might have reasons that they're saying that. The second rule that I also follow is I don't like conservative companies. And when you start raising up your cash pile, to me, that's more of a sign often of poor leadership rather than you doing it for a reason. Okay. My thoughts on Apple, they have way too much cash. They've been sitting on it forever. That's not my kind of style.
Yeah. All right. Got some hot takes there from Alex Talk Stocks.
Yeah, who knew?
Yeah. Hopefully those billionaires don't come after us.
That's right.
Mind you, that's Alex's perspective. If you want to be my friend billionaire, please do. All right. So that's financials. Healthcare. Any adjustments here?
Yeah, so I think when you think healthcare, again, the demand is going to continue to be stable regardless of war. And so what we're going to start seeing is a lot of that tech selling is going to move into the healthcare because it is such a defensive position. So my pick here is I go back to Johnson & Johnson. I want to be in the largest player with the most impressive cash flow and the most guaranteed demand. Like we talked about, though, the upside is going to be really limited. And when the war de-escalates, this will be one of the first stocks that starts to get hit a little bit. So I wouldn't make any significant moves to get into Johnson & Johnson during this situation, but on a short-term basis, you will see a bump in the stock.
Yeah, we've mentioned Johnson & Johnson before. I believe it was your dividend tier ranking video. Encourage anyone interested in dividends to check that out. But they have a great dividend, right?
They do. They have a really strong dividend, and they continue to grow it. Well, that's what I'm looking for in times of safety. And so that's why you're going to see a lot of people flocking to like a Johnson & Johnson.
Right, which you're not going to see a lot of growth in the stock price, but you get that dividend kickback, and it's a safe harbor, if you will, during volatility.
Yeah, I would think of it as like I can either keep my money in cash for pure safety, but then I know that my cash is getting inflation impacted, and so it can't just sit there forever. Investing in Johnson & Johnson is where people are like, I want some safety, but with growth and then kind of a cash kickback with the dividend.
All right, so that's Johnson & Johnson making the list. Next one is utilities in power, but for this sector, clarify the difference from the other electrical one we talked about.
Yeah, so this one is we're moving away from the electrical infrastructure piece. And then energy is like the actual commodity producers of energy.
Right.
This one is the utility providers. So like the people getting power to different areas.
Okay. Eaton was the guys helping building out electrical infrastructure in buildings and things. This is the companies that are actually providing the energy.
That's right. So the Eaton helps me distribute my power.
Yeah.
The utility provider is the one providing the power to me.
All right. Well, who's your pick here?
So my pick here is I'm going back to Constellation Energy. So again, I want to be in the number one nuclear provider. And I think what's interesting with nuclear energy as well is that we're able to kind of sign in for, if energy security is my number one priority, and during war times, the idea of securing our energy as a nation becomes even more possible. Nuclear is like the most consistent one that I can sign up for. So I would think you're going to see more people signing up for larger deals with nuclear. Constellation's number one. They're going to be the number one that actually benefits from those contracts.
Constellation Energy making the list as well. Putting you on the spot. I haven't asked you about this before. Are you pro nuclear energy or against?
I mean, I'm super pro nuclear energy.
You are?
I think that everybody's like Chernobyl.
Yeah, worried about
What about Chernobyl?
Yeah.
It's like, okay, that was obviously like a horrific nuclear incident.
Yeah.
But the differences from there versus like the modern day nuclear approach is very different. I mean, moving forward as just we need renewable energy at a mass scale, and there's no better way to do it than nuclear.
Not to mention we have nuclear submarines, aircraft carriers, and so it's been vetted and used for decades, just in limited use cases. But thanks for sharing. That's definitely, especially when you think of data center needs, and people complaining about how much water it takes and all cooling and all of these things. Nuclear becomes a really attractive option, not only because of its output of energy, but like being able to contain that in smaller. So you're not talking about a gigantic nuclear power plant in every city all the time. You're talking about these micro type use cases. So,
and I mean, what you are bringing up does lead to there could be a politic aspect to owning Constellation Energy.
Yeah.
That could help, or unfortunately bring the stock down if regulation kicks in and they're like, no, you can't use nuclear and you cannot expand. That will impact the Constellation Energy from there. So that's an important aspect to think about.
Yeah, we've talked about Constellation before. I'm curious if you're a listener or viewer right now, for viewers, what their take is on nuclear. Would love to hear from you guys. Are you pro or against? All right, so that's our third hot take from Alex for nuclear.
Third time's a charm.
Third time's the charm. Travel. Next sector. I would guess one to avoid in this scenario with war escalating, because nobody wants to be in a cruise ship anywhere near war or things like that. But what's your pick?
Yeah, I mean, this is probably the most negative sector we've talked about. I mean, you're going to see fuel price up. There's going to be demand for travel plummet. And especially for international, like you mentioned, I don't want to be on a cruise ship. I don't want to be flying. I don't want to be anywhere near that. And so immediately, this is going to be the hardest hit sector of all the ones that we've talked about. And so unlike some of the other ones where I would recommend watch listing some of these companies and getting into them, I don't really like this sector anyways. So in my opinion, I wouldn't even pick a winner here. I would just give this as a reminder of why I don't like this industry. So if you go back to the pandemic, some of the cruise lines and airlines were at all-time discounts. So I'll be the first to admit there were some amazing buys you could have done, because a lot of those the stock got overreacted to and it went down too much.
Right.
But I would rather not guess who that's going to be. I'd rather avoid this sector in general. And this, as an escalated war, is another reason to not own stocks that are in travel and transportation.
All right, so no pick for this?
Yeah, I would have this one labeled as just avoid for this one, especially if the war continues to get worse. These will be the ones that are going to be getting hit consistently with double-digit days down.
And this war is unique being in the Straits of Hormuz, where oil is very big, or big impact from it.
Yeah, I mean, it's a double whammy, right? My fuel's going up in cost, plus my demand is going down.
Yeah, which means air travel costs, especially with airlines, is going to go up. People with inflation, they have less discretionary spend. They got to spend more on fuel for their cars, or grocery increases. So maybe less vacations as well.
Yep.
All right. Well, we love to travel, but this would not be the season, I guess.
That's right. Just like Apple. I love their products. I don't always love the stock.
Gold as a sector. What's your take here?
So again, remembering that investors are seeking safety during uncertainty, people go running back to gold and the gold miners and all of that. So you're going to see a massive boost to this sector specifically. In general, I don't really like owning these, but on a short-term basis, specifically during really high volatility moments, these are the ones where you're going to see gold itself and stocks related to gold really picking up a lot. So in general, I don't really like making moves within this sector, but this would be one of the times that on a short-term basis specifically, paying attention to this one is going to be one of those that you might want to think about.
Okay. And are you still taking the angle similar to last time, where you don't necessarily want to invest in gold itself, but the picks and shovels around gold?
That's right. So I don't want to buy the commodity gold because, again, like we talked about, I think it's too volatile. We've seen it significant swings this year. I don't want to be messing around with that. I would go back to Agnico Eagle because they are one of the leaders within the gold mining process. So naturally, they're going to be able to make more money by getting gold if gold is worth more money. So that's kind of the thinking there. And I that would be one of the companies that I would really have high on my list during times of really high uncertainty.
All right, so that's gold, picks and shovels, if you will. Couple extra credit questions here, just broadly speaking, for this whole discussion, not sector specific. But thinking about investment strategies for the retail investor, hopefully there's a strategy that includes dollar cost averaging, investing regularly. With that in mind, and war increases volatility, all of that we talked about, do you DCA more, less, save some cash, look for maybe less frequent DCA so you have more in that amount that you can look for better deals? Any strategy change here?
Yeah, so I would say if I'm a long-term investor, which again, I think the people that I want watching the channel, that's the primary focus of where I want you to be as an investor. Right. I would often say you don't do anything. In fact, think of these as a wartime is one of the times where my DCA price is actually helping bring my average to a good one, depending on how long I've been into it. Yeah. But I'm probably getting whatever company I'm DCAing into at a good price because in general stocks will be down during these processes. Now, if the war starts really escalating, there does come a time where I should probably either turn my DCAs off and lean more towards into just holding cash rather than continuing to distribute it. But I think the first step could be maybe making the amount of putting in less frequent or lowering the amount that I'm doing. But again, I would only do this if we're getting significant disruption going on. I would have to see really further escalation going on to feel comfortable that my long-term plan is now in doubt because of how bad this war is getting. So in our instance of the situation we're talking about today, I would recommend in general people don't make anything. But again, this is a situation you need to do of what you're actually more comfortable with. If the war is making you really uncomfortable, that could be a good place to start.
Yeah. And the risk with it getting too cash heavy is inflation's going to eat into that if you do that for an extended period of time.
That's right. And I mean, if anything has shown us, you do not know what's going to be happening the next week. If the war is escalating now, and then the next week all of a sudden we get a peace treaty deal out of nowhere, guess what? Stocks are going to run hard, and you're going to be really sad you're in cash and that you got out of the stock. Right. So that's why I like making the bet on stocks long term, and I need to see a devastating event for me to really understand of like, okay, maybe stocks are not the right answer right now.
Yeah. Looking back to season 1 and some of our other videos we've done where we talked about investing strategies, it's important to note that you also have a focus, broadly speaking, of your budget in an emergency fund, high yield savings account, where you're putting some funds away for things that come up in life. At least park some of that extra cash in a high yield savings account or something so you're getting some interest rate in.
Yeah, we never want to have cash sitting in a normal bank account. Yeah. You really want it to be in those high yields when it's not being used. Yeah. There's lots of good high yield savings accounts you can be in there, like well into 3+%. So we don't want to be giving more of our money away by just having it sit in cash.
Yeah. So at least do that if you do take the cash approach.
I think that's good advice.
For the investor on a personal level, I remember you talking about investing through COVID and some of those things you went through, some big losses, at least on paper. What are some of the pitfalls or things you want to advise that new investor or that retail investor on do's and don'ts? Watch out about this. Don't fall into this trap. Those kinds of things. Any nuggets from your previous experience?
Yeah, I think this situation that we're talking through today about an escalating war is both like on a human level not good, but it's also the worst for human psychology of what happens. Media outlets love when war breaks out. They're able to spam every headline with fear, stock market crashing, bad, bad, bad. And what that leads is to the panic selling. And that's absolutely the worst thing that any investor can do in a situation like this. But it's also very natural. If I'm seeing significant double-digit pullbacks within my stocks, I naturally am going to start panicking and wanting to sell. This reinforces the need for a good long-term plan. And understanding that my long-term plan is being impacted by a short-term event, so I need to stick to my long-term plan to help me mentally prepare. And so hopefully through the series of videos, I can be mentally prepared for what I should expect to come from war. We're not telling you to do anything, but what you should expect. And if I have a good understanding of it, it allows me to be a little bit more even-keeled, if you will.
Yeah, that's good feedback and a good reminder, because when you look at those gains, it puts, at least for me, or not gains rather, but some of the losses, you question like, was that a bad pick?
Right.
But if you have the game plan, you have the conviction like, no, this isn't caused by any drastic event for the company. This is just a macro external thing. It could give you at least enough confidence to hold strong.
That's right.
Yeah. Thanks for sharing.
Yeah.
Can you put us a nice summary in a little bow package for us to kind of, what are the highlights here?
Yeah, I think the main takeaway as a long-term investor is war is just another uncertainty that has to inevitably be ready to be planned for, and it's going to continue to happen.
Yeah.
So as an investor, I know times of war are going to happen, and they're going to affect my stock. My general advice when it comes to war is you don't really need to do anything. A lot of these wars resolve themselves over time, and if I am one to sell into panic, I guarantee I'm going to figure out a way to lose my money by doing that. So my general advice around war is to not really do anything. These episodes, though, should help you get a really good lens on the different sectors and how war impacts each of those and the stocks within those that I like based off of all those things. I think a great way to think about this is maybe watch listing some of the companies that we've talked about, going in and researching more about those companies and either figuring out, is that a company I want in my portfolio because of war? Or is this maybe another idea I have that if I own this stock, I need to be ready if war does come, the stock is going to be more impacted than maybe some of my other parts.
Well, this has been great. Obviously, a lot going on in our world these days. So it gives us some game plans no matter which way it goes and some thoughts. So thank you for sharing. Yeah, please like and subscribe. Let us know if you have any other feedback from what we've talked about or ideas we didn't cover. Like and subscribe so you can stay ready for those. And by the way, they could reach out to you at alextalkstocks.com or obviously in the chat in the video. But I love that we have a newsletter where you not only do a stock of the week, things like that, but you give little nuggets and advice through our newsletter. So how is it? Have you been enjoying doing that?
Yeah, so the newsletter is just another way for me to share more information outside of these videos. So I usually have a topic of the week of anything that's trending.
Yeah.
Maybe identify a stock that maybe you should have top of mind. Maybe they have earnings. Maybe give a little tease on what I think of the stock. Yeah. And then finally, I think there's some reflection time on some of the bigger trends we're seeing and things that people need to keep in mind. And one of the best sections of the newsletter is the James Corner.
Yes. No, but yes. But true, I do enjoy. Thanks for sharing a little corner. It's fun to reflect and share a little bit of my learnings as well. Well, thanks for sharing today and look forward to the new series starting next week. Alex, thanks for talking stocks today.
No problem. We'll talk soon.
Ciao.